Hello everybody, and welcome to this video where I want to analyze 9 solar stocks, and give you a little bit my valuation and my views on each stock, keeping in mind that there's 3 new stock in this spreadsheet compared to the last time I updated it, and it's Sunnova, Shoals, and Nextracker, and these 3 companies are new, so this is the new part of the analysis, and then I'll be making a commentary on Tesla, Enphase, SolarEdge, First Solar, SunPower, and ARRY Technologies, which is companies that I've already commented on. But this is nonetheless helpful because you can see the valuation that I get for each of these stocks. And if you're new to the channel, you may know that I own 2 positions out of these 3. I own Enphase and Tesla. I consider Enphase and Tesla to be tier 1 stocks, to be my top stocks in my portfolio. Tesla is by far the biggest name in my portfolio, but I'm extremely bullish on Enphase as well. And as far as all of these stocks, as far as a pure play solar, in my view, that remains Enphase. But let me go ahead and tell you what I think about each of those. So the first stock that we have is Sunnova. So Sunnova is kind of an odd company. It's a solar installer, and they seem to be installing mostly Generac products. And if you follow Generac, and if you know what has happened with the Generac optimizers, you understand why it could be a little concerning, because Generac has had issues with their products in the past, and it's not a pure play solar company. It's noteworthy to note that it seems like Sunnova has a big business installing Generac, not inverters, but generators as well. So they have a little history with that. But that's not the point. And the newer Generac products are actually fairly decent. They don't have the issues that they had in the beginning, for solar, that is. And the problem, though, for me when I look at a company like Sunnova is I start looking at the balance sheet. And to me, when I look at these balance sheets, it oddly looks like a GE Financial. Not to say that what happened to GE Financial would happen to a Sunnova. Far from that. But they have a lot of debt. They have $6 billion in debt, and it's a $8.79 billion enterprise value. Their market cap is $2.5 billion. So the enterprise value is mostly made up of debt, and it's understandable when you see the business model. The business model is all about leasing you the equipment and letting you buy energy from the equipment that you're leasing. It seems to be the bulk of the business. They also have a owning option, but that's also a lease. So in my view, Sunnova is a risky business because of the leasing aspect that they have, and because they have so much debt. So that's the main reason why I would stay away from this company. And if you feel I'm wrong on this, feel free to let me know. But it's to me, revenue financing. I try to be very cautious about companies financing their own products and their own sales. And Sunnova seems to be financing a whole bunch of what it sells, which is dangerous in my view. Then Shoals. Now, Shoals is very interesting because the numbers for Shoals are actually excellent. Growth over next 4 quarters above 30%. And in my channel, I look at companies that grow at least 30%. So Shoals is well above 30% at almost 50% growth. The gross margin is excellent for Shoals. By the way, that was true for Sunnova as well, except Shoals has very low debt, very little debt. And what they do, Shoals is very yet again a different space of the solar. They focus on the electrical equipment that you need for large installations of solar. That is those giant solar PV fields that sell electricity to the grid. And so what they do is they specialize in cabling, combiner boxes, connectors, all of that stuff. And this company is growing impressively, and I don't have much to say negative about this company. It's all a matter of a question of do you want to be in the electrical supply or in the equipment, the electrical equipment business? Do you want to be a supplier of electrical equipment? Because there's a lot of legacy player in that field, right? Emerson is one, but Eaton is another player. There's a lot of legacy companies that are playing in this field. So Shoals may be the newer company that's doing really well, but to me there's some competition. But nonetheless, I mean it's undeniable that this company has been growing very well. And the valuation, actually, when I look at valuation on my enterprise value over gross profit over revenue growth, that valuation is higher than Enphase. So to me, I would obviously be interested in buying Enphase over Shoals. But if someone, say, does not believe in Enphase for a reason or another, this could be a good stock. Let me move on to Nextracker. So Nextracker, in a nutshell, is very similar to ARRY Technologies. They appear to be mostly competitors, except Nextracker has worse off numbers on both the next 4 quarters revenue growth at 21% and on the forward gross margin, the gross margin at 15%, which is very low, which is something that you'll find at the end of my analysis. These gross margins are just too low for me. So this is a company that I would stay away with. And obviously, with such low gross margin and such low growth, you're going to have an enterprise value over gross profit over revenue growth valuation that is going to be extremely costly. This is a very expensive company in my view for what they do, and I would not be touching this company. Just my humble opinion. Moving on to Tesla. Now, Tesla, of course, the main criticism that you can make about Tesla is that solar does not matter for Tesla because it's a very tiny portion of the business. It barely moves the needle for their revenue. Tesla has a lot of interesting solutions. As far as the inverters go, they have kind of a hybrid solution between Enphase inverters and microinverters, right? And between regular string inverters, which is they take a string inverter technology, but instead of putting, say, 12 panels like an Enphase, they'll put 3 or 4 panels per string. So they'll have inverters, regular inverters, but they will have plenty of strings, which I think is kind of a very interesting solution that they have for solar. And of course, Tesla has the Tesla solar tile. Again, very, very, very tiny cells. This is almost something that's essentially only used in architects' houses, and it's all about the attentional resources of Tesla. It's like when are they going to spend the time focusing on solar? Is it worth it for them to take away attention from, say, the electric vehicles, or take away attention from their AI initiatives to focus on solar? In the past, they have shown that they do not focus on solar. It is not their main focus, even though they have a product offering. Anyways, I own Tesla because of the EVs and my belief in the EVs, not because of a solar story, but Tesla fits into the solar stocks. I want to make that clear. They have a very respectable positioning in solar, and of course they have the leading battery for solar, which is the Powerwall. The Tesla Powerwall is the leading solar battery, so it absolutely fits in that group. Let me move on to Enphase. So Enphase, I've made actually a full video on Enphase, a hour and a half video right there, an hour and 35 minutes, where I talk fully about my bull case for Enphase. But really simply, it's my favorite play. Why? Because microinverters, they're easy to make. You can make them really, really fast. You can scale quickly. One panel installed equals one microinverter. That's the way it works with microinverters. And so you can really end up in a situation where you end up selling millions and millions of these really, really quickly. They are setting up to be at capacity of 10 million production of microinverters actually, and that will keep going. And inverters have a lot of microinverters have a lot of very good things going for them. One of them being the redundancy, right? You don't run the risk of having a string inverter breaking on you and then you don't have energy. But they also last longer, about twice as long, and they just do better under certain circumstances, like, say, the shade, for example, and they also allow for better monitoring. They allow for better safety because they're close to the water panel, so you can shut them off. So in the event of a fire, you can shut off those solar panels. There's plenty of technological reasons as to why I believe that microinverters are better, and I go in depth in this in my bull case for Enphase video. But there is a competitor to Enphase, right? The competitor to Enphase is SolarEdge, and that's why I say SolarEdge is pretty much a duopoly with Enphase. And SolarEdge, typically, you're gonna find that this company in the stock market at least is a little bit cheaper, but not that much cheaper, and they're slightly bigger, and they're growing slightly slower, and they have slightly slower gross margins. I often say if one wants to be safe on residential solar and invest in residential solar, it may make sense to own both. No investment advice, of course, but in my view, Enphase is better play, which is why I chose Enphase. Maybe value-oriented investors maybe will prefer SolarEdge because SolarEdge is a little cheaper. SolarEdge, on the other hand, though, they still use the original technology, which is string inverters. They still use string inverters, which is kind of a legacy technology for solar, and so. As a result of that, it comes with a lot of problems and a lot of issues, especially with the optimizers. And there's this whole debate in solars, whether string inverters and optimizer work better than actually just microinverters. Because in most cities around the world, it's becoming code that you need to have a shutoff at the solar panel level. The shutoff can't be at the string inverter level in the garage. So if you need to have a shutoff at the solar panel level, why wouldn't you just put microinverters that can shut off the power up there on your roof instead of having a string inverters, and on top of that complexifying the whole thing and adding optimizers on top of string inverters. So anyways, but it's the older technology, and older is kind of my negative way to call it. Some people call it more positively, and they say it's a more reliable, it's a more time-tested technology. That's what some other people say. And an investor must make their opinion on this. What do you prefer? Do you prefer microinverters or do you prefer string inverters? And in my view, they will likely both win substantial market share. Let me move on to First Solar. So First Solar is what I call a legacy solar stock, all the way back to 2007, I believe. It's known for American-made, commercial quality solar panels for big installations. They market themselves as greatly sustainable, beautiful-looking solar panels, kind of a sort of Rolls-Royce of solar panels. They're also highly scalable in their manufacturing. But First Solar, in my view, I will never understand why First Solar is so expensive. Actually, if you're familiar with my valuation framework, First Solar is almost as expensive as NVIDIA per my EV over GP over revenue growth. So that's how expensive that stock is. And you explain that why, because they have an 8% gross margin. And that's why I don't want to invest in panel makers, because it's a commodity. Making solar panels is a commodity, and the competition from China is so strong, and Chinese makers is so strong, that I have a hard time believing how anybody makes any money making solar panels, quite frankly. It's becoming a commodity, right? Every solar panel looks the same. It's a commodity. When you have a commodity, margins tend to get destroyed, and they trend towards zero, right? It's kind of like drilling oil out of the ground. It's kind of the same thing. Moving on to SunPower. So when it comes to SunPower is actually a very interesting stock. It's the cheapest stock in this spreadsheet. And it grows decently at 21%, keeping in mind that's lower than my minimum threshold. Like a lot of those are lower than my 30% threshold. 19% gross margin, which is decent. I'd like to see it higher, but that's decent. I think SunPower has developed itself a very interesting niche in this sector, in the sense that they make their own solar panels, they install their own solar panels, they have their own system, their own brand. SunPower, it's its own thing, but they also shows the right technology, in my view. They use microinverters, right? They co-branded, they have SunPower microinverters, which are actually Enphase branded, co-branded microinverters. So what I mean by co-branded, it's not the right word. It's essentially Enphase makes the microinverters for First Solar under the name brand of First Solar, but it's actually an Enphase product. And they're getting into charging, they're getting into batteries. So SunPower, the summary for me is it's a holistic play on residential solar, where they try to do everything from the solar panels to the installations to the monitoring. They try to be fully vertically integrated, which is very unique in this space. I still prefer Enphase. Margins are better on Enphase. Growth is better with Enphase, so which is why I prefer Enphase. Nonetheless, interesting positioning and interesting company. And the last company that I have in my valuation for these solar stocks is ARRY Technologies, which is a competitor of Nextracker. And what they do is they do racks that track the sun. So they help you track the sun as the sun moves into the sky for large installs, and the value proposition for ARRY Technologies, but also for Nextracker, is that if you install my product, if you install this product right there, you're going to make more electricity because the solar panel tracks the sun. And in my view, and this holds for Next Technologies, is there's a lot of competition in this space. You still have a lot of homemade contractor solutions, actually, where a contractor for a large project will just design something. And then you have a lot of Chinese racks as well that still exists. And again, I'll finish on this, just like I said in my last video, is to me, once a setup adds a mechanical part, you are removing a major strength of solar, and that is you're removing the fact that solar doesn't break, right? Solar panels that have been around for roofs for 30, 40 years, they're still producing electricity. Granted, they lost efficiency, right? They're at 50% or 60% efficiency for the very old ones, but you don't have that mechanical risk. And, and a mechanical object that lasts 40 years, I yet have to see. The more movement you have, the more likely it is to break. And so that's why fundamentally I have a problem with that, because it introduces an issue in solar that it didn't used to have, right? It's one of the main reasons, for example, that I'm against wind turbines, because wind turbines, they produce electricity, it's green electricity, they do a bunch of electricity, etc. But as far as maintenance goes, it's absolutely insane, right? You need to have technicians, people go on there, it's all mechanical parts, it moves. Solar is so easy, it doesn't move, it doesn't do anything, it just sits still and gets the sun. That's all it does. Why do we want to add complexity? That is my problem with these setups. I understand why utilities do it. I understand that it's a higher, faster ROI with these systems, but nonetheless, I would not invest in them. And I'm generally much more bullish on residential solar than I am on utility solar or grid solar, because if you think about it, if, as per Tony Sebab, thinking on this, if most homes have enough for 7 to 9 times the power that they need in roof space, if that is the case, do we really need utilities to produce electricity, right? Or can we just transfer the power from individual homes and businesses who produce that power? Can we just transfer it to those plants that need the power? And there's obvious exception, right? You have some industries that require a lot of energy, like data centers, like steel, like that. Those are very obvious exceptions. But aside from these obvious exceptions, I think utilities are in trouble going forward. And when you invest in solar, keeping in mind that the solar that you invest in is going to help utilities and it's going to be sold to utilities, I think over the long term it's a riskier bet. So it's all a matter of risk, but I think it's a little bit of a riskier bet. Anyways, thank you so much for this video, for watching this video. I'm sorry, I'm a little tired tonight. Thank you so much for watching this video. This is not investment advice. This is just entertainment. I hope you like the video. Please subscribe. Have a wonderful day.